Before we begin, I would like to acknowledge the Cammeraygal people, the traditional custodians of the land from which I join you today, and their elders past, present, and emerging. I also acknowledge on your behalf the elders of the lands from which you join us today. My name is Marina. I'm the president of the Australian Society for Computers and the Law. We're an interdisciplinary think tank promoting sustainable law, technology, and society through education and policy. Our patron of long standing is the Honourable Michael Kirby, and we're honoured to have many distinguished leaders, academics, professionals, and change makers within our community. We are delighted to co-host today's webinar with the Australian Computer Society and offer a special thank you to Dr. Ian Opperman, ACS's President, and Mark Portlock for ensuring that the technology runs smoothly. Thank you, Mark. Today's topic is future payments in the digital era, where our experts will be discussing a range of topics, including central bank digital currencies and global stablecoins. Please be aware that the event is being recorded, so during the session we ask that you keep your cameras and your mics off. However, after the presentation, we would welcome you to participate in Q&A, and if you feel inclined to do so, you could switch on your camera and share your question out loud. Now it is with pleasure that I introduce you to our moderator, Joni Perovic. Joni is a highly regarded lawyer with expertise in blockchain, digital assets, token offerings, centralised and decentralised exchanges, and a host of other topics. And like us at the Australian Society for Computers and Law, is passionate about educating lawyers on technology. Joni, you're our obvious choice for a moderator this evening. Now over to you to introduce our esteemed panel. Thanks, Joni.
Thanks, Marina, and forgive me for any bandwidth issues. I'll rely on you to wave at me if I do need to switch my video off for the sake of integrity of audio. Thank you for having me here for AUSCL and Australian Computer Society for hosting us with the technology. We are very lucky to have two professionals join us today. The first is Tony Richards from the Reserve Bank of Australia, who heads up payments policy and has an incredibly impressive background, including some study at Harvard. Watching Suits at the moment, I'm just completely in the world that appreciates Harvard law. And I think all of us lawyers wish that we could have gone to Harvard at some point. But Tony is actively involved in CBDC research with the RBA, and we will prod that throughout our questions today. And very thankful for Tony making the time to join us. We are also joined by Dr. Anton Didenko, who is a senior lecturer at the University of New South Wales. Anton is widely and well published on fintech, blockchain, digital assets, and the status of regulation around the world on these sorts of matters. So very lucky that Anton has also taken the time out of his busy day to share some insights. So I would encourage everybody to add some notes and comments in the chat. I will be keeping an eye on it. So if I have an opportunity to ask the questions through the session, I will, but there is a dedicated Q&A of 10 minutes at the back end. So without further ado, I mean, we've got lots of acronyms here and we can unpack them as we go, but there's talk of CFI, DeFi bridges, a lot more institutional capital interested and being deployed in DeFi and digital asset schemes more broadly. What are the role of stablecoins as we transition and learn more about central bank digital currency designs and multi-CBDC arrangements to deal with cross-border payments and other financial arrangements? Will Bitcoin and Ethereum networks be the global financial settlement layers if we can't sort of agree some sort of international approach? So we won't be able to get through all of these questions today, but with the two experts I have on this panel, we're certainly going to be setting the groundwork and allowing you to go away with a starting language and some education to build upon in your research and involvement in this space, because at the end of the day, it is emerging technology, blockchain and other technologies being used for payments and the financial system, and we need more legal minds and technologists at these issues and coming up with appropriate solutions. So, Tony, to set the groundwork on understanding future payments in the digital era, but through a domestic lens, which could include stablecoins and CBDCs, can you help the audience and I understand some of the pain points and limitations of the Australian payment system, which already feels digital, reliable and fast? And can you go through the role of the RBA, the real-time gross settlement system, the new payments platform, incumbents and fintechs, and in terms of objectives such as reliability, affordability, resilience, and how it promotes competition and financial stability in about sort of 5 minutes or so?
Thanks, Joni. That's a very long question you've started us off with, but I'll try to touch on some of those aspects, and then we can get back to them through the Q&A if I haven't touched on them. So I was planning on speaking today mostly about CBDC, central bank digital currency, but it might be useful for me to start by telling you a little bit about what CBDC isn't. So the first thing is it's not cryptocurrencies, or more specific, probably more correctly, crypto assets. So these are the Bitcoins, the Ethereums, the Ripples, etc. of the world. They've got their own currency unit, and they're not denominated in the currency of any sovereign issuer. But the authorities are typically calling them crypto assets because we don't think we should think of them as currencies. They're also not generally regarded as a form of money, that they don't provide the key attributes of money, particularly that they're not a stable form of store of value. Globally, there's a lot of concern amongst regulators and consumer protection agencies about the investment risks of investing in cryptocurrencies, and tax authorities and agencies with responsibility for financial crime are paying a lot of attention to transactions going through cryptocurrency. So I think it remains to be seen whether there's a long-term future for cryptocurrencies, particularly if we find that that there is issuance of central bank digital currencies, and if stablecoins become more mainstream. That's not to say, of course, that that the distributed ledger technology aspect of cryptocurrencies and blockchains, etc., and smart contracts, etc., that a lot of those innovations, they could well have a significant use in the future, in the financial system of the future, but it's just not obvious that that cryptocurrencies will have a significant role, particularly if authorities worldwide become more concerned about their use, for example, in financial crime. So let me move on to stablecoins. Currently, cryptocurrencies are being used to transfer value on the blockchain in some cases, but they're very uncertain store of value. You know, the value of Bitcoin can change by 30% in a week. So people have looked towards stablecoins. So stablecoins are typically denominated in the currency of a widely used unit of account, such as the US dollar, or they might be designed to minimize price volatility against something like the price of gold, and that's to make them more attractive as a means of payment, and to make them usable as the means of transferring value for the payment aspect of a transaction on the blockchain. So a tokenized transaction where an asset is being bought or sold, and stablecoins might be used as the means of payment for that. And stablecoins are designed to maintain a stable value by holding assets that back the coins on issue. Though as we know that there are some varying degrees of credibility associated with these backing arrangements. Now looking at the prospective future use of stablecoins, one thing I would say is that if a stablecoin has got the prospect of becoming systemically important, so it's used in high-value financial transactions, and if doubt about the financial backing of the stablecoin were to emerge could cause financial gridlock, then I think a stablecoin that could be systemically important would be subject to significant regulation, and there's a lot of work going on among the central banks and securities regulators globally to think about how we might, what sort of regulatory arrangements might be suitable for global, might be appropriate for global stablecoins. Now, the other form of stablecoin is the type of stablecoin that was that's been foreshadowed by Facebook and the consortium that it founded a couple of years ago. That's going to be more presumably for household use if it ever is launched. But there, I would say that if indeed a stablecoin like that had wide usage for households, then I think you'd see that there'd be significant interest by regulators. And we've currently got some work going on the Council of Financial Regulators in Australia to think about the regulatory arrangements for stablecoins. And if households were holding a lot of their wealth in stablecoins, then I think that you'd see a high degree of regulation, probably that have to be fully backed by high quality assets, and it would look something like a purchase payment facility or a stored value facility regulated by APRA probably, or supervised by APRA. Let me now move on to central bank digital currencies. So central bank digital currencies are denominated in the national currency. So they are it would just be a new form of the Australian dollar. So just like banknotes or exchange settlement balances are a claim on the central bank digital currency would be a claim on the central bank, claim on the Reserve Bank. It wouldn't be a claim on a commercial bank like your bank deposits currently are. And central bank digital currencies could either be a retail CBDC or a wholesale CBDC. A retail CBDC would be a form of a payment instrument that households could pass between themselves, that households could use in their everyday shopping activities and things like that. But it would be a claim on the Reserve Bank as opposed to a claim on a commercial bank, the way that your debit or credit card payments currently are. But a retail CBDC, it would be a claim on the Reserve Bank, and we would be responsible for issuing it. But the entities that would be providing payment services to households using the CBDC would be private sector entities. So they would be they might be the banks, they might be the large technology companies, they might be new forms of payment service providers. Now, right now, the Reserve Bank isn't convinced that there is a particular need for a retail CBDC, because Australians are actually we're well served by a pretty good domestic payment system. Payment costs for merchants are very low in Australia. With the arrival of the new payments platform a few years ago, households now have access to real-time electronic payments, account-to-account payments. I could make a payment to Joni. She might bank at a different bank to me, and she'd have it in about 2 seconds. So we're not convinced that there is a significant need for a retail CBDC in Australia, but we've got an open mind. We note that there are retail CBDC projects in some other markets, but the reasons why other countries might want to have a retail CBDC, for example, the Bahamas or China, are not necessarily reasons that would say that we should have a retail CBDC. Now, I'll finish up by talking a bit about the wholesale CBDC. So currently, we provide a form of electronic central bank money, which is exchange settlement account balances. And so banks and some other payment service providers can have accounts at the Reserve Bank that are that you can think of them as central bank digital currency or central bank electronic currency. A wholesale CBDC would be a new form of money that it would probably be tokenized. I should note that a retail CBDC would not necessarily be blockchain or DLT based, but a wholesale CBDC would almost certainly be that. And that would be the primary goal of that would probably be to provide an asset that could be used for payment purposes in tokenized transactions. So I said that currently people might be using cryptocurrencies for payment purposes on the blockchain, and stablecoins are increasingly being used. But one possibility is central banks could introduce wholesale CBDCs, and that might well displace a lot of those stablecoins, because people might say, well, if I want a safe asset to buy and sell things with in tokenized transactions, why not use central bank money rather than a stable coin, which it's got uncertain backing. So so people might say we'd much rather use the CBDC. So we've done a number of experiments in wholesale CBDC, and we're continuing work there. But our guess is that the strongest case for a CBDC would come from wholesale use rather than retail use. But Joni, I'll stop there, and I'll be happy to touch on any other aspects of your questions as we go on later this evening.
No, thank you. That was an incredible overview, and I hope the audience appreciates you going through all of that. I certainly do, and it goes to some of the design considerations of wholesale first, probably, and then retail a bit later. But what is the scope of our design of a wholesale CBDC, and if it sort of is like a layer of banks and other financial players having immediate access to the wholesale CBDC and then providing it to other levels, and that promotes innovation and affordability and competition, then perhaps the design of a wholesale CBDC is still a great effort, even though we're not advancing what a retail use CBDC might look like. And we can actively learn from stablecoins that are used for retail household expense purposes by observing how the likes of a USDC, and when it is eventually released, a DM, how much of it is used in retail marketplace shopping, and what kind of programmability benefits can we get from the retail industry. But I guess to provide that global context of what we are learning from payment systems and what incumbents are doing to try to keep up with innovation, Anton, can you shed any light on how Australia's payment system stacks up to its APAC and broader international competitors? And can you touch on what an Aussie retail CBDC might add in terms of benefits and risks to Aussies and Australia? Things such as automation of compliance with laws, taxes, and other reporting, the ability for us to export our CBDC tech and innovations there, and the thinking and social license and skills that we build in Australia to operate this kind of technology that might form the basis of a new global financial services in West. Anton.
Thank you, Joni. I lost you a little bit at the very end, but I think I got the gist of the question, actually several questions. And thank you for inviting me to casually compare Australia's payment system to the rest of the world and the whole of the region.
I should say, we'll have links to your papers as well. So if anybody wants to deep dive, they can do so after the session.
Okay, that helps. So I'll try to focus on CBDC then on the second half of the question. But of course, to touch upon the first one, of course, Australia's payment system is very well placed internationally. And this has been confirmed in IMF's Financial Sector Assessment Program in 2019, I believe. And the current payment system review aims to further modernize the payment system. Obviously, there are challenges. The regulation of e-money and known as purchased payment facilities or PPFs has been challenging, and even the phrase PPF is purchased payment facility is a mouthful to me personally. Although to be fair, I think e-money is rarely popular in well-functioning and sophisticated payment systems internationally. So there's a really good explanation why we don't have too many PPFs. But again, I understand that the gist of your question is really focusing on CBDC, and the Asia Pacific region as a whole is very diverse in terms of CBDC initiatives. There's a whole range of different approaches to CBDC. On the one end of the spectrum, we have a number of jurisdictions who have been conducting CBDC studies and designing proofs of concept trials for years. These projects typically focus on wholesale CBDCs. Examples include Project Ubin in Singapore by the MAS, Project Intanon in Thailand, Project Stella, the joint initiative by the European Central Bank and the Bank of Japan. My personal observation, and the recent observation, is that on the other end of the spectrum, we have development institutions in the region that are also showing increasing interest in evaluating the potential of CBDCs for financial inclusion. I have recently co-authored a research paper for the Asian Development Bank, for example, which discusses whether and how smaller Pacific Island nations could use maybe a CBDC to tackle some of the financial inclusion challenges. And of course, there is the mammoth, absolutely mammoth project by the People's Bank of China to launch a retail version of digital renminbi, digital yuan, whatever you may call it. I think the abbreviation has been changed recently, but the project is continuing at enormous speed as it looks. And I have in front of me some of the recent statistics published last month by the People's Bank of China. Apparently, as of June the 30th, 2021, the digital renminbi has been applied in more than 1 million scenarios. They have opened more than 20 million personal wallets and more than 3.5 million corporate wallets for this digital retail version of Chinese yuan. And the overall number of transactions has exceeded 70 million, with a transaction value approximating 34.5 billion digital yuan. So this is huge. And this is absolutely, this is something that even developed economies, major economies, will be looking for, no doubt. As for the benefits and the challenges for a potentially for some kind of future retail version of a CBDC in Australia, well, this is a really difficult question, because at this stage, a discussion about the implications of a CBDC for a major economy like Australia, remains largely theoretical. To date, we have seen only, well, I guess, two CBDCs that have gone live, the Sand Dollar in the Bahamas and the Dcash in the Eastern Caribbean, on top of the current pilot of the digital yuan in China. And several years ago, we saw the launch of Venezuela's Petro, which is technically not a CBDC as far as I understand, because it's not really linked to a central bank, but it's part of what I like to call sovereign digital currency. But however we characterize these problems, we are yet to see a fully implemented CBDC issued by a major economy. And according to a recent survey by the Bank for International Settlements, most central banks surveyed appear to be undecided as to whether to launch a CBDC in the future, or at least in the short to medium term. And I think this is potentially also one of the reasons why last year in September we saw a publication in the RBA bulletin saying that the main conclusion is that the public policy case for issuing a general purpose CBDC in Australia is still to be made. But still, we obviously can talk about the benefits and challenges. And the benefits discussion is quite important. I think benefits will vary quite a bit depending on the size and the type of economy in question. And if we're talking about major economies, one popular claim in favor or argument in favor of a CBDC is that it could be used as a backup, right? As a backup in a situation when cash, for example, is no longer widely available, or in cases where commonly used electronic payment systems are down, a backup solution. And also the argument is that if cash completely disappears, then essentially the payment systems becomes privatized, more or less, and to provide some kind of alternative to privately issued forms of payment, central banks may be expected to issue an electronic form of currency of a claim on a central bank in the form of a retail CBDC. Another argument in favor of a launch of a central bank digital currency is the monetary sovereignty concern. But I have to say it's probably quite weak for major economies with well-functioning payment systems. The fear here is that some alternative forms of digital currency or maybe global stablecoins may lead to substitution away from domestic currency, and therefore central banks might jump in and issue their own CBDC to prevent this substitution. Another potential benefit oftenly cited is so-called programmable money that relies on the smart contract functionality of DLT. And the potential here, for example, to allow triggering an immediate payment of taxes on certain transactions. However, I have come across certain publications, even by central banks, suggesting that smart contract functionality can be decoupled from DLT. That's quite interesting, but I'm not a technology person, and it's probably something we could discuss with computer scientists and experts in the field to see whether really smart contract functionality can exist outside distributed ledgers. And of course, probably the final, more or less common argument in favor of a central bank digital currency is the ability to generate additional tools to develop monetary to convey monetary policy within the economy, such as, for example, a solution to overcome the zero lower bound problem and really allow negative interest rates in the economy in cases where a CBDC would fully replace cash in circulation. But the risks, on the other hand, are also could be quite significant. The commonly cited ones are the risks to financial stability and the risk of, so to say, mother of all bank runs. In terms of financial stability, well, one could expect if the larger part of the population were to store deposits in the form of the CBDC directly with the central bank, then the commercial banks would experience an outflow of deposits, which would require commercial banks to find other sources of funding, presumably in capital markets or in equity, potentially leading to a less stable banking system. But obviously, central banks do have tools to prevent that or preempt that, such as launching a two-tier central bank digital currency systems, whereby commercial banks are not excluded from the operation of a CBDC, or there could be limits on the amounts of CBDC that could be held by an individual or withdrawn at a particular time. And going forward, if Australia were to launch two-tier CBDC available for the general population, then the question is, what is going to be the cost to consumer? And to give an example and to compare with the Chinese project, according to the People's Bank of China, the digital yuan is actually free to use for both the end users and for commercial banks participating in the project. So that's something to keep in mind if commercial banks are included in the CBDC equation, whether they will be able or willing to keep the costs down, or maybe to eliminate the cost, or to somehow recoup the costs in one way or another. And the final risks I would like to flag, there are many things to talk about here, are probably the things that we have to expect going forward. It is technological sovereignty and cybersecurity, of course. And when I talk about technological sovereignty, I refer to the so-called black box problem. That is the need to understand the programming. And a lot of central banks around the world, I'm not talking about the RBA. I have utmost faith in the professionalism of everyone working at the RBA. But a lot of least developed country regulators, central bankers, have admitted that they do lack the expertise to fully understand the programming, the code in the platforms provided by third parties, developed by third parties. And this is something really to keep in mind going forward. And of course, cybersecurity means not just designing the protections within the CBDC wallets and other access mechanisms, but also the need for consumer education going forward. Thank you, Johnny. I should probably stop here.
Thank you. No, that was really helpful, Anton. And I guess it's some of the tensions playing out. And so with the example of USDC, you've got fiat US dollars being held in a reserve and nothing being done with them. And those US dollars are deposits that have been taken away from US commercial banks to be held in a reserve to fully back the digital USDC. And Australia, we do not have an Australian-based privately issued Australian dollar stablecoin. And so Australians and Australian innovators are using US dollar denominated digital assets to conduct that innovation and to engage with lending protocols that feel like banking, where you deposit some digital assets and get interest-like returns, and other capital markets transactions. And so I do worry that as good as our domestic payments system is, that we're missing out on a trick here. And if all of that activity is being done in US dollar denominated digital assets, how can we best inform monetary policy and financial stability? And actually, will more Australian dollars be held in US institutions to sort of back the US reserves? And so I would love to talk to the likes of Tony and Anton in more detail about those sorts of nitty-gritty issues. But so we've got a couple of questions to solve. There's CBDC and digital assets for domestic payments innovation, but then we've got cross-border. And one of the key features talked about of blockchain and cryptocurrencies like Bitcoin and Ether are that the transaction costs are just that much lower, and the experience is that much faster, and despite some barriers to entry and the hurdles of just simply getting into the space. But so on cross-border payments, I understand that the G20 Financial Services Board cross-border roadmap is the major priority for central banks. But Tony, can you give us a quick recap on where that cross-border roadmap is at, and whether it involves probably wholesale CBDCs, and whether the scope of wholesale CBDCs is for that cross-border use?
Sure. Thanks, Joni. I'll just tell the audience a bit about the FSB its program. It's called Enhancing Cross-Border Payments. It was agreed to in October 2020, and it's been endorsed by the leaders of the G20 countries. So there's a lot of focus on this. And the problem they're trying to solve is to improve cross-border payments, to make them, particularly the speed, the cost, and the accessibility of cross-border payments, which are much more expensive and slower than domestic payments. And the the roadmap, which has been published by the FSB, has got what's called 19 building blocks. And these are a range of initiatives that are designed to improve cross-border payments. Most of them are about enhancing the existing payments ecosystem. So these would have the benefit of improving the current types of cross-border payments that go through the banking system. So a lot of them will help a bank-to-bank cross-border payment, but they'll also be good for some of the disruptors that have got different models to the traditional banking correspondent banking arrangements. But in addition to these measures to enhance the existing payments ecosystem, there are also there's also a small focus area which is more exploratory and covers some emerging payment infrastructures and arrangements. And one of those is to look at the possibility of that CBDC might be part of the solution to improving cross-border payments, or that stablecoins could be. There's no presumption that CBDC and stablecoins are a solution to the cross-border problem, but there is a working group, a building block that's exploring that. They might well be part of the solution, but they're unlikely to be the only solution. And one thing I would say is, it's unlikely we can put in place CBDCs to solve the cross-border problem anytime soon. It would take a number of years before a wide range of countries have got CBDCs in place. And so, you're probably talking 5 years or more before CBDCs could be the answer to cross-border, to some of the problems with cross-border payments. On the other hand, it might be the case that we can use existing payments infrastructure like the NPP. So an alternative to essentially linking CBDCs might be to link fast payment systems. And recently, the central banks of Singapore and Thailand announced a project where they've managed to link their two fast payment systems. So, for example, if we were to link the NPP with some other fast payments systems in other leading economies, that could probably be a solution in a small number of years rather than a significant number of years. So there could be other solutions to cross-border payments in addition to CBDCs, but we've got an open mind about it, and we are doing some work with other central banks to look at some of the possibilities here.
Great. Yeah, no, we look forward to finding out further information on those projects. And so, Anton, I know that you're across some of the other cross-border and multi-CBDC trials. Can you let us know what we've learned so far from them and what the incumbents like SWIFT are doing to maintain their relevance and compete with the features of blockchain being emphasized and worked on in these multi-CBDC trials?
Thank you, Joni. I think this discussion is very important because however we look at CBDCs, I think a discussion about their cross-border application is unavoidable, even if, as some of the developers claim, they are designed primarily for domestic use. And I think the current situation, development status on some of the projects is actually fortuitous because, in fact, we have very few fully working CBDC projects out there. So most are either at the very early proof of concept stage, some are pilots, again, just recently launched, but the majority are not there. So this means the programming is not finished yet. And this is a perfect opportunity now for regulators, for central banks that are considering a CBDC to start with a clean slate, so to say, and to start building their CBDCs with built-in cross-border functionality in anticipation, as far as it is possible, of future cross-border use. And interestingly, last month, the Bank for International Settlements published the results of a survey of central banks and their initial thinking on cross-border use of CBDCs. I believe they surveyed 50 central banks around the world, and the outcomes were not definitive. Roughly 50% of respondent central banks said they remain undecided as to whether CBDC should be allowed to be used on a cross-border basis, for example, by foreign residents or in other jurisdictions. And interestingly, the primary concern that regulators seem to have, according to the survey, appears to be so-called digital dollarization, or I think in the light of the Chinese project, it could be digital renminbification, so to say, the fear that the domestic currency will be displaced in payments and financial transactions by a CBDC issued by a foreign central bank. And the challenge here, of course, is that if it happens, then it might be very difficult to reverse the status quo, because CBDCs tend to go, are likely to operate across borders technically from the technical perspective, and also unlike cash, there is no need to, there's no wear and tear. There's no need to update the actual supply of actual notes and change them or replace them as necessary. It can be, so it can stick for a long time. But I think the important starting point for this discussion should be, what does cross-border actually mean in the CBDC setting? And the Bank for International Settlements has highlighted several scenarios. The first one is that when a CBDC launched by a central bank is used cross-border in another jurisdiction, or by non-residents traveling to that central bank's jurisdiction. And the second scenario is then when we have a multi-central bank digital currency arrangements, and I think we are slowly coming to that stage where we might see the emergence of multi-CBDC arrangements, where different central banks are cooperating in designing joint projects. And actually, well, based on the very limited evidence we currently see, that we're already seeing some kind of a whole range of projects and initiatives, starting from the proposals to enhance compatibility by maybe using some common standards, all the way to integration of CBDCs into a single system on running, so multiple CBDCs running on a single platform. But again, I think, if we look back at this survey, more than 60% of respondents, apparently, respondent central banks seem to be undecided about the model of multi-CBDC they prefer. And linking back to the G20 initiative, I think the solutions that the multi-CBDC projects are trying to provide are to the very same frictions that they were identified by the FSB and other international bodies back in 2020. They seek to reduce operational costs, mismatch in opening times, and communication standards by using 24/7, using single communication standard, and so on. And as for known cross-border CBDC projects, there are a couple already. And some of them, and actually they are interesting because they build on very different assumptions about the future of CBDC, how CBDC is going to work going forward. Some are more ambitious than the others. For example, we have seen this project, the collaboration between the Bank of Canada and the Monetary Authority of Singapore, Jasper Ubin project, were linked on the wholesale networks, the payment networks, and it was quite interesting because the different platforms in two jurisdictions that were tested were using different platforms. The Jasper network was on Corda, and the Ubin network was on Quorum. And so the Jasper Ubin project has demonstrated it's technically possible to synchronize payments among two different CBDC platforms among themselves. Quite interesting. On the other hand, we see some of the projects that are trying to offer integrated solutions. And one of the examples is the joint initiative by the Bank of Thailand and HKMA, Hong Kong Monetary Authority, Internet Line Rock project, and its continuation. But I would like to flag, I don't really have a lot of time, unfortunately, but one project I would flag is the initiative by the Saudi Central Bank and the Central Bank of the United Arab Emirates. It's called Project Aber. And it's quite interesting because it uses DLT, it uses a permissioned DLT platform, and it envisages the creation of a single CBDC by two central banks at the same time. So it's a jointly issued central bank digital currency. And it's a sophisticated project which incorporates different types of ledgers. And just to finish quickly with the incumbents projects, well, I don't really have that much time again, but yes, incumbents are trying to cement their position, their role in the payment system. SWIFT has come up with the update to its messaging platform called SWIFT GPI, which offers additional developments for cross-border, so unique transaction identifiers, agreement among participating banks to process payments quicker. We have Visa's B2B Connect platform, which offers one-to-many cross-border transactions sent and directly by participating banks. And also the CLS Bank International has integrated DLT into its bilateral foreign exchange netting service called CLSnet. But largely incumbents are not trying to upend or fundamentally change the cross-border payment system, relying on correspondent commercial bank accounts, unlike CBDCs, which will probably change the way we see and understand cross-border payments.
Well, again, a jam-packed summary of a lot of what's going on. Thank you, Anton. And I would open the call out for anybody who has questions that they would like to ask in the remaining minutes of this webinar. Please jot them in the chat, and if we have an opportunity, we'll get you to switch your video in and ask the question. I will try and get through some of the questions that have already been asked. And the one by Eric Van Volpen, I think I might just direct you quickly to the project a couple of years ago by the Commonwealth Bank and a couple of other players, including Cyro's Data 61, where they actually used smart contract programming to codify the requirements under the National Disability Insurance Scheme, and that they actually didn't have a blockchain-based token, but there was a system designed where the payments were settled using the NPP. So a bit of a hybrid example there, and perhaps leveraging the best of both worlds, as Anton mentioned earlier, that we might be able to detach the smart contract programmability from, the underlying blockchain system that might be used. So then we had a question from Adam Keynes that payment costs are definitely not low. There's definitely a use case for reducing the cost of acceptance. And I will divert to Tony here for a second. If you could address this question, but also share with us some of your closing comments on what role do you think Australian payments policy has to play in Australia, continuing to be internationally competitive, but also enabling and readying Aussies and businesses and government to interact with, the future payments in the digital era that is coming very fast. Tony.
Right. Thanks, Joni. Just quickly on the cost of payments, when we look at international comparisons, Australia compares pretty well with other countries. Payment costs, for example, for merchants in the cards area are about half of what they are in the United States, and some other studies that have been done of the economy-wide cost of payments. Australia looks pretty good. That's not to say we shouldn't keep trying to do better. And that's one of the things that the Reserve Bank focuses on, the Payment System Board focuses on. Joni, your sort of closing question, what's the role for policy here? as you know, that there's Senator Bragg's committee, his Senate committee has got is currently doing an inquiry on Australia as a technology and financial centre, and we'll do whatever we can to support that committee. The Reserve Bank doesn't specifically have a responsibility to promote Sydney or Australia as a financial centre, unlike there are a few central banks out there that have that responsibility. I think the Monetary Authority of Singapore has it. But we don't actually have a lot of regulation that's standing in the way of innovation here. We actually don't have that much regulation at all. And as I said earlier, we're doing a lot of work on proofs of concept, etc., to try to better understand CBDC and the possible case for CBDC. The Reserve Bank has recently, you might have seen that there was the announcement recently of the digital finance CRC that the Reserve Bank's participating in, and that's a major new CRC that's going to be looking at particularly the shift towards trading in tokenized assets, and we'll be supporting that work and learning from it as well. And we're also doing a lot of work with other central banks on, or some other central banks on CBDC and possibly linking fast payment systems. But there is a role for the private sector here. There is actually nothing preventing Australian banks from experimenting with stablecoins, so that just as you've seen some banks in other countries issuing or participating in consortia to issue stablecoins, there would, in principle, there'd be nothing to stop the Australian banks coming together and issuing stablecoins. You could have yellow coins, you could have blue coins, you could have red coins. But as the governor said in a speech a number of years ago, there probably is going to be a role for public money here. So if there are going to be these coins that are issued by private sector entities and are used widely used in the economy, then it's highly likely that the central bank would be looking to issue its own coin, its own CBDC. So I'll stop there, but I'm happy to take any other questions from the audience if you turn to audience questions.
Thank you, Tony. And the next one I'll move to is one from Louis de Coqueur, and it relates to regulation. Will regulators win the race, and if so, at what cost? And there's some reference to FATF's, the Financial Action Task Force, Virtual Asset Service Provider standards. And so we are in the race right now, and FATF is leading the money laundering and terrorism financing front. So I think if we have the blue coins and the yellow coins and the red coins available to us in Australia, I think some people are still worried that they'll have to do traditional KYC and hand over their personal information and go through those traditional processes. And part of the spirit of the movement that is DeFi and pseudonymity, not anonymity, is emerging concepts of zero knowledge proofs, and particularly zero knowledge know your customer processes, where protocols can interact with trusted addresses that have gone through a process of zero knowledge KYC. So in that sense, you satisfy yourself that your protocol and the innovation that you're bringing to the world is collecting funds, allowing payments, allowing lending, banking, and other capital markets transactions, but not supporting money laundering, terrorism financing, or any other illicit kind of activity. And so that is the push of FATF, and we're looking like those standards will be finalised, or the recommendations will be rounded out around October, and so that slant is pushing us, and it's very closely related to digital identity. And Australia has, through our Digital Transformation Agency, just put up some digital identity system proposed legislative framework. So there's a lot that it seems that we need to get right structurally before we can get the best of both worlds, I suppose. And so, Anton, in answering Louis' question of whether regulators will win the race, and if we get traditional KYC that applies to stablecoins and DeFi financial products, what do you think Australia needs to be doing both defensively and strategically to well place us for the future digitalization and globalization and decentralization of payments?
Well, I think we already, thank you, Johnny. I think we already have real experts who know what to do to go forward. But in this high level, in responding to this high level question, I think we should remember what kind of date it is and what kind of anniversary is coming up. And I think about 2 weeks from now, less than 2 weeks from now, we're coming up the 50th anniversary of Richard Nixon's famous Nixon shock, which ended commodity-based US dollar. And now we have an international payment system where US dollar is the dominant tool, is the dominant vehicle for international payments, but that value is essentially based on trust in the Fed. No longer backed by gold for so many decades. And in this, we should not underestimate the launch of central bank digital currencies by major economies such as Chinese. And I think this is going to be the turning point really going forward. We should not miss by any means. And I'm currently looking, I've just read the report produced by the People's Bank of China, where the regulator essentially says that, well, our central bank digital currency is mainly designed for domestic retail payments, but at the same time, they acknowledge that the digital renminbi is technically ready for cross-border use, and they stress that the market factors will determine the future. Market factors will determine who will use these new central bank digital currencies issued by major economies. In light of those comments, I fully expect the cross-border use of digital yuan in the future, and it's something not to be missed by any means. And going forward, I think we are now at this point in time where we see an increasing interest in international collaboration for major international and also interest among international organizations in the field of designing CBDCs and running those CBDC to CBDC initiatives. And so this creates, and just to flag this point, the IMF has recently announced, I think it was actually last week, the IMF announced its determination to be the leader in the space of digital currencies going forward, of course, including CBDC projects. What it means for the future and for Australia, I think it's the pressure. It's real pressure for central banks. It's no longer, I think, enough to maybe develop some kind of proof of concept or do some kind of trial and a pilot and then sit and wait until the need arises or the actual competitor, CBDC somewhere, enough disruptive comes up. But I think we're coming to the point where central banks would do well to consider cross-border interoperability from the start and be proactive, even if they do not think about launching a CBDC straight away.
Well, thank you both. An incredibly informative and jam-packed session. I think that I have dealt with all of the questions in the chat, but feel free to ping me or Marina if we haven't dealt with your question, and we will personally respond back to you after the session. We are at the top of the hour, and I would like to thank again Dr. Tony Richards and Dr. Anton Didenko for their time and all of the efforts that they're devoting to the work of future payments in the digital era, and for joining us today. And with that, I will hand over to Marina for the final closing and some future sessions, and thanks.
Thank you, Joni. Dr. Anton Didenko, Dr. Tony Richards, and Joni Perovic. Thank you so much for sharing your time and expertise with us this evening. I'm speechless. We could have spent hours more hearing the conversation and hope that there are many of these discussions going forward. We strongly believe that an educated discussion such as this and an educated community can only help to promote inclusion, to improve decision making at all levels, and to help create a sustainable future that works for all. So thank you so much for playing your part. We do hope to invite you back again soon and wish you all the best with the very complicated matters that you have to address every day. We will now turn quickly to some future events. Mark, if I could please trouble you to put up the slide very quickly. You're all invited to attend our next session, which will be on the Department of Home Affairs paper on cybersecurity called Cybersecurity Regulations and Incentives. We're organising a town hall from members of the department and all those sponsoring societies there for you to understand better what their paper is about and to give you an opportunity to engage with them in preparing your own submissions if you're interested in doing so. Of course, we're always very happy to partner on submissions as we did with the digital identity piece. So please reach out to the Society if that's of interest. You can see other events that we have coming up also. They're all free. Please subscribe to the address up there, the yellow one, and we'll be delighted to send you your free invitation for you to share with your communities as well. Again, thank you so much to Joni, Anton and Tony for your time. Thank you for joining us this evening. We hope you had a fabulous session as we did. And look forward to seeing you at our next event. All the best. Bye for now.